Dr. CEO, you can start first.
Yeah.
Let's explain what is objective of it.
Okay. Thank you very much for coming, for this event. Basically, as what we mentioned, this MIDA MIR MOA is long overdue. Because we need to basically tell both sides, stakeholders, right? The government side as well as business community side. Because I think this business monthly survey, we don't have this earlier on. We have some from Dozer, for example, but it is not on a monthly basis. But other countries are having it. Like America, I think Japan also have these indicators that will then tell us what is the business condition of the country. So that is only one product that we've started with MIR. We will have more than that. Even educating business community about some of the policy side, for example, and the impact to business communities, right? So I believe this is an area that we want to also explore further together with MIR, looking at the impact of policies, for example, like how FTAs basically give positive impacts to companies. How, together with MITI also, we are trying to promote more, the usage of FTAs among the companies, especially our local companies. So that is to open up the discussion basically.
Right, from a MIER standpoint of view, we have been discussing with, that's what Dato just mentioned, this discussion has been taking place for some time. Today, if you notice, many countries, especially developed countries, policy makings are all based on data-driven and analysis. And from our discussion with Dato wants to move in that direction, given that the global landscape of the economic has changed tremendously, not just on the external front, but also domestically here. Everything is now number crunching, data-driven kind of scenario setting. So with that, what we have decided was to come out with the monthly manufacturing business condition. Okay? We know that there are quarterly surveys out there, half-yearly surveys out there, but they are useful. But a monthly one would be giving you a more current flavor. Plus, at the same time, it's going to give you a 3 months forward outlook. What the sentiments is all about. Now we have just started with this program. This report first. Going forward, we are already working on the consumer sentiments next. That is also going to be on a monthly basis. So that is another one that we will be collaborating and working together with MIDA. And from here, we'll be collaborating with many other areas of surveys, because surveys will tell us more inside stories, the real stories of what's happening. Then we take something on a very headline kind of numbers.
Yeah, I know. How many respondents?
Okay, this involved about 21 sectors. Okay, 21 sectors. We had about close to 200 respondents for a start. The kind of respondents we had, I must say, is that very well spread. Okay? It is not kind of very skewed, but it's very well spread, covering most of the economic sectors or business sectors.
These things are all around the businesses, or they are taking account into the consumer spendings on so on.
Oh no, this is purely business, purely on business. To your question on the consumer side, that is something we are working on it. That is going to become a consumer sentiment report. We'll be rolling out hopefully over the next few months. Okay, we are testing it out.
Just to add to what Dr. Anthony does mention to you all just now, you mentioned about the industry. The focus is on manufacturing companies across 19 industries, food manufacturing, F&B, what do you call chemicals, petrochemicals, petroleum products, machinery equipment, electrical electronics, transport equipment, to name a few. And total of 30 questions, divided into 3 sections: demographic information, development during current months, and also development in the next 3 years. So that's how we put the survey.
No, if I may add, in the mind,
Yes, please.
we were discussing this earlier before I retired from MIDA. It will definitely strengthen MIDA decision because we are backed by data, backed by research, which we don't have. So it's very good. So as MIDA goes about to sell Malaysia, so to speak, backed by solid data. And also to support industries companies because MIDA's strategy is two, basically. One is building an ecosystem. Number 2 is supply chain. So when these data from many sectors, they are very supportive of decision making made by industries. If you're comfortable, this is the way we see.
And just to complement the whole part here, besides manufacturing and consumer sentiments, we'll be also looking at potentially on the services side, which is purely service, because it's a very big segment, accounts for about 58% of the GDP contribution. So services is like the support for manufacturing in all of the primary side here.
Maybe can I add?
Yes.
I believe that business communities have decision making on investments. If they have sources from MIDA and MIDA, this is reliable, authoritative, and informative, so that the investors, whether foreign or domestic, they can depend on the survey results and they can make decisions on the investments. Whether it's 6 months or 12 months, but because every month there is a reliable information for the business conditions, so that is at ease for them to make decisions. This is from private sectors, business communities.
Thank you.
Ringgit this morning traded at 4.24. So do you expect that ringgit will be traded at 380 to 390 by end of this year? And you said that coming next year it's 4.10.
Yeah, you see, the current, it's all sentiment driven at the moment, because it's a 50 basis point cut. Most economists were looking at 25 basis point cut in actual fact, so it was beyond expectation. So with that kind of thing, now there is a current adjustment that will take place. Okay? Then you'll have to look at the US presidential election coming to the picture. You also have to look at the US data. Okay? At the same time, Malaysian numbers will come in. The point here is that, like what I said, it's 440 for now, but this is a spot rate. But at the end period, it could come back, it could retrace back and come back to about 440, 430 levels for this year. Going forward for next year, 394 is within reach. Because what will happen? There's going to be an economic slowdown in the US, and there could be more rate cuts coming in. Job markets will not be very exciting there. Over here, it's more exciting because the Asian economy is still buoyant. Even if China were to grow at an average pace of 4 to 5, we have got other countries supporting. We have the intra-regional trades out here. So all these things would definitely benefit ringgit because we come back on the radar screen on the portfolio investment, especially stock market. You can see a few billion net inflow already started. We have been all the while registering net outflow. Now we are seeing net inflow. So that is going to be another booster to the currency itself.
Malaysia contributed here.
It's mentioned that just now the 50 basic points cut. Is it within your expectation? And what's the impact to our economy and maybe the stock market as well and also forex?
Okay, coming back to the 50 basis point, we were looking at a 50 basis point, okay, as opposed to a 25 basis point. Because if you ask me, you cut a 25 basis point after wasting so strongly over the last few years. Okay. The 25 basis point is a bit meaningless. And if you look at the labor data numbers are now slowly weakening over there in US. And therefore, with that cut, it's certainly you're going to see, you're really signaling to everyone that the economy is slowing down. Okay? But I'm not saying that it will go into recession. Even if it goes into a recession, it could be a technical recession. Maybe it's 2 quarters negative growth. Overall can still be a positive number. But given this scenario setting, we'll start seeing reversal flow of funds, those funds that were in US. Now the gameplay is Asia. US, Euro is kind of softening. Gameplay is Asia. And the darlings of Asia is one of them is Korea. The other one is Singapore. And the other one is Japan. And Asia will be benefiting from the tech cycle growth and the intra-regional trade here itself. Malaysia will be on the radar screen. And that's why you can also see the FDIs are coming in, foreign investments are coming in strongly, and we'll start seeing market to start benefiting the portfolio side. Bond side has been doing very well all the while. We have no issues on the bond. But the market on foreign exposure came down as low as 21% foreign participation. So now we'll be seeing gradually the foreign participation to pick up, not just because of the what I call interest rate differential, the reforms that has been taking place, that has given a lot of confidence. Because all this while we know we need to do it, but that bold measures were kind of delayed a little bit. Now we're doing it. So with that kind of scenario setting, that gives you another positive sentiment to foreigners, in the sense that going forward next year, I'm looking at Malaysia to be re-rated upwards, not downwards. So when we get re-rated upwards, it's certainly going to benefit, one, not just the exporters, not just the domestic players, but we also have businesses who are exporters and domestic players. It's a combination of 3 portfolio segments we have here. So these are things that we'll be seeing gradually coming into the picture. Plus now we are politically also very stable. So I think we are there in the position already.
But on the reform side,
Yeah.
because we know that the government start with the, I think it's the diesel reform without any subsidy, and then I think the market is waiting for the RON 95.
Yes.
So what's your opinion on this? Because some people think it's too slow to see the reform start.
See, reforms, we cannot be too aggressive. Okay? You've got to be very mindful about the B40 group, okay? The M40, especially the M1 and M2. Okay? And we saw what happened during the COVID pandemic, not just Malaysia, across the board. There was a certain percentage, if I can recall correctly, it's about close to 20% of T20 dropped to B40, I mean M40. There was about 40% of M40 went down to B40. So if you want to do an aggressive reform, it can actually choke the economy. Okay? And what we are trying to do, what I see the way the government is trying to do is technically, now we have done the diesel reform, we need to assess to see how is it going to affect the cost of doing business. We cannot rush into, you come out with your diesel subsidy reform, next you hit petrol. Petrol, the usage is higher. Okay? Certainly. And that kind of spillover effect, if you go aggressively on the petrol RON 95 reform, then it is going to just backfire. There's the risk of it backfiring and hurting businesses is going to be bad. And not just businesses, because there's a spillover of consumer engagement. So I feel that we need to, following the diesel subsidy, following the electricity reforms, diesel reforms, we need to now assess carefully to see how the businesses are performing. And thereafter, probably we need to go into a more targeted kind of RON 95 relaxation or reforms than to go en bloc.
And also the inflation factor
Yeah.
at the balancing point now.
But the cost of living is something that's always been high. But the good point now is that ringgit is strong, it's getting stronger. So your import cost gets cheaper a bit. So that can give you a bit of a leeway and a buffer. We can't rush that fast. We need to balance a lot of factors.
Any more questions? Okay, thank you very much.
Okay, thank you very much.
Terima kasih.
Terima kasih.